Let's talk housing now as the spring selling season is well underway. Data today showing a mixed picture. Pending home sales actually surged by the most in a year, but mortgage applications continue to slip. Let's get some insight on the market now from a top real estate broker. Ryan Serhant is founder and CEO of Serhant, a real estate brokerage with more than 1,000 agents across 9 states now, which is crazy, Ryan. Well, you should go public. Compass did.
Do you think I want that kind of pressure?
I do. I think you would flourish. You would absolutely shine. Okay, so I remember the last time you were on about a year ago, and we were talking about high rates. You said you were advising a lot of people to date the rate and marry the house. I'm just curious for an update now on, are prices coming down? Are rates still high and a problem? What are the buying and selling conversations you're generally having? Just what's the market like?
Absolutely. Well, March was great. I think the March numbers just came up. Everything was up. Sales were up 6.1% month over month. Some of that is standard springtime home buying. Some of that is because there was a dip in rates. There was a strong sense of consumer confidence. And then everything changed in April. 36% of all available homes in April across the United States had a price drop. So you have prices starting to come down. April saw more price reductions on homes nationally than any April in the past 12 years. So the tariff scare came through and then rates spiked. So yes, we have people who bought homes over the past 12 months who've had pockets of moments to do rate reductions and to refinance their loans. But for the most part, we're seeing pricing start to come down. Inventory is starting to creep up. I think in the past 30 days, 14% of all pending home purchases were actually canceled, which is the highest level we've seen since the beginning of COVID, which provides great opportunity for buyers to get back out into the market right now.
Yeah, I mean, it doesn't feel good for a lot of owners who have fought so hard to get into their homes. Like, oh, come on, I don't want prices to come down. But it sounds like that would bring some rationality into the market.
Yeah, remember, this is all near-term thinking. Home prices have actually increased nationally by over 50% in just the last 4.5 years. So even if we give back 20 to 25%, it'll be a big, terrible media headline, but we are still up net effective positive. I think the Fed, though, is trying not to lower rates, right? They've been pretty clear about that. Jobs are good, right? Employment strong. Inflation is still there, it's sticky. So we'll see where we go with rates. The housing market is determined by only 3 things, right? It's supply, it's demand, and it's rates. So we need something to give. And right now, it's supply in some key markets, as a lot of these purchasers who bought during COVID are coming back to market as their lives change, which is all pretty natural.
Ryan, it's Dom. One of the things that kind of drives all of that conversation and kind of weaves its way through those 3 things you just talked about is people's perception of what their financial future will look like. And we learned from the Mortgage Bankers Association, we saw mortgage applications for purchase and refinance fall 4% over the past week. A lot of that was due to maybe people's, I guess, caution about where things could look or what things could look like in 6 months. Are you seeing that kind of at least change in sentiment? And if not, do you think it would change the housing dynamic?
Oh, absolutely. I think people buying homes up to $1 million and people buying homes over $10 million are not really affected by what's happening in the market day to day. Right? There's low inventory. Luxury purchasers and first-time home buyers need to make moves. They need to live somewhere. If you're looking for a home or looking to sell a home between $1 and $10 million at a national level, there is some pause. People are taking a step back. They were saving, right, in the equities markets. They were saving that down payment, trying to put down at least 30% if they couldn't put down any more than that. And so they're feeling a little bit nervous. But at the same time, we all want lower prices. Right? We want lower prices. We want lower rates. And you can't get the good, which would be lower prices and lower rates, without some of the bad, which is a reduction in equities markets. So you kind of have to look at every crisis as an opportunity. And so that's what we're advising buyers to do. Don't wait until the sun comes out to go and buy your convertible. You'll pay more money. Wait until it rains. You're going to feel nervous because you're not going to drive it that day, but you're going to get the best price. And so the buyers that are making moves now, just like the people that bought in the real estate market in March and April of 2020, are the ones who have forward thinking and they're predicting their own future. And their own future looks pretty bright when they're buying against the grain.